To quote your last interview, you said that fintechs are like Ferrari. India needs still a efficient small car. So can I assume that now that SROs are being set up, RBI is essentially looking at extending the regulation in fintech? The soft touch era is over.
If I can digress a little bit, I think the Indian speed today is not like a small car.
Right.
India's economic growth and the way India is growing, I think it is the Tejas speed, the Tejas aircraft speed.
Right.
I think, we are experiencing. But coming back specifically to this question, you said that...
is the soft touch era over?
We don't want to slow down any economic growth. We don't want to slow down the growth of the financial sector. We are completely focused on the growth of a robust financial sector, the growth of the financial sector on a sustainable basis. You see, growth has to be sustainable in the long run. If you grow at a very high speed just for a few years, and then there is a crash, that's not on. As a regulator of the financial sector, it's our effort, it's our responsibility to ensure that the financial sector grows and grows, in a with a good speed, but in a sustainable manner. So therefore, in the recent years, we have deepened our supervisory processes and approaches, and we are now keeping a very close watch on activities of, not only sectoral, subsectoral activities, but also we are monitoring the activities of the individual banks or the individual NBFCs, the larger ones particularly, let's say the top 100 NBFCs, which control roughly about 80 to 90% of the NBFC space. So the monitoring, the supervision is now much more active. On the regulatory side, we have completely overhauled the regulatory architecture in the sense that for NBFCs, we have positioned a scale-based regulation. We have digital lending guidelines. We have issued ownership guidelines as well as governance guidelines for scheduled commercial banks. So therefore, we have brought in a lot of changes in the regulatory side to ensure that our financial sector remains strong and healthy. And on the supervision side also, we have deepened our supervision to the extent that we constantly monitor what's happening both through offline methods as well as, through off-site as well as on-site methods, including a lot of online information which we get to ensure that the Indian financial sector, again, as I mentioned, remains strong and healthy and grows in a sustainable manner.
But Governor, looking at AI, better compliance, can I say that compliance now will occupy center stage, and Reserve Bank of India in a sense could also revisit the total penalty which is there in the system, which currently is actually minuscule considering the global standards for non-compliance?
You see, three principles which we highlight, in fact, you can call them the tripod of stability in any financial institution. The tripod of stability is management of risk, is ensuring good compliance, ensuring reasonable compliance, and the third aspect is taking the internal audit seriously, making the internal audit functions, very making that efficient. And that is why, as a part of our governance reforms in banks and NBFCs, we have mandated creation of dedicated senior level positions of Chief Risk Officer to look after risk management, Chief Risk Officer, Chief Compliance Officer, and the Head of Internal Audit. All these three functions, we have spelled out what are the areas they should be looking at. We have mandated that there should be sufficiently senior officers having the required capability. So therefore, ultimately, compliance is an essential part of good governance. And, from the Reserve Bank, we are giving a lot of emphasis on these three things: risk management, compliance, and the findings of the internal audit, how they are being addressed.
Governor,